Mixed close on Wall Street as Dow closes higher, while an 11% fall in Tesla shares sees the Nasdaq close with a cut of nearly 1.5%. The S&P 500 is also on track for its worst year since 2008. Stocks in the Asia Pacific open largely lower as investor sentiment weakens ahead of the new year. The SGX Nifty 2 is indicating a negative start for the Indian market. Brent crude trades around $85 a barrel near its three-week highs. Russian President Vladimir Putin signs a decree banning exports of oil to countries participating in oil price caps. The threat of possible production cuts by Russia also supports prices. The RBI's annual report on banking trends points to improving health of the banking sector, says bank balance sheets have seen double-digit growth after a gap of 7 years. Overall asset quality improves while incidences of fraud dropped 56% by value. Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines. So the global backdrop does not look so strong today, and that is something that we are seeing in the Asian markets today as well. So let's take a look at what's happening there. While the Taiwanese index is lower by 0.9%, Hang Seng has come back after a two-day holiday. So that one is recouping some of those gains. So 300 points higher on the Hang Seng as we speak. But apart from that, if we look at something like a Nikkei, if we look at something like a Kospi, most of them are lower in trade today. Nikkei is down by around 0.6%, Kospi down by 2% actually, Shanghai 2 lower by 0.5%. And as a result of which the SGX Nifty is indicating that the start for our own markets, well, that could be in the red, down 80 points. After yesterday's very volatile session, we'll have to see which way things go, because tomorrow also we have the monthly options expiry as well. Let's talk about the US markets. Wall Street ended yesterday's session largely lower, with the Dow Jones ending just 0.1% higher, the S&P losing 0.4%, and the tech-heavy Nasdaq, the day's underperformer, shedding around 1.5%. CNBC's Steve Kovac gets us a wrap of all the action on Wall Street.
A mixed day for stocks as Wall Street nears the end of a tough year with its biggest annual drop since 2008. The Dow closed with a small gain today. The S&P ended with a loss of 0.4%, and the Nasdaq finished down 1.4%. Shares of Tesla fell another 11% today, heading for their worst month, quarter, and year on record. Production problems in China due to COVID outbreaks are adding to the downward pressure on the stock from investors who think Elon Musk is spending too much time on Twitter and not enough on Tesla. That's the action from the U.S. market. Back to you in Mumbai.
Okay, let's also listen to Stephen Roach, who's the former Morgan Stanley Asia chairman, as he speaks on China reopening and a lot more.
China is going to rebound next year, in part because of the lifting of zero COVID and also because of stimulus to the property sector. But it's going to be a muted reading, and most importantly, don't use the U.S. Reopening experience as a guide to what to expect in China. The behavioral shock that occurred under zero COVID is going to be long-lasting, and meanwhile, in dealing with this highly transmissible Omicron, they have lousy vaccines, they've under-vaccinated the elderly, and they have limited intensive care unit capacity in their hospital systems.
All right, that's global market action, but how will these overnight cues impact our own markets? We have a research team joining in to tell you just that, what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Vivek, let me come across to you first. Not looking like a good start to trade today.
Well, absolutely right. Typically what you see historically is the fact that in the last week of December, you tend to see a bit of a rally across global markets, but this time around that's not really happened. In fact, even yesterday, the US market close was very weak. The Nasdaq, in fact, fell over almost 1.4%. And, as you mentioned a little earlier, Tesla shares continued their decline, dragging the index lower as well. Fortunately, European markets were shut, so you didn't really see too much of negativity or any negative sentiments coming in from Europe. But remember, Europe opens today as well. Coming closer, to some of the commodity prices and how exactly they are expected to impact our own markets. crude prices continue to remain quite steady. Brent prices hovering around the $85 a barrel mark, and WTI futures hovering around the $80 a barrel mark. Now, coming to our markets, Indian markets continued their up move for the second straight session, yesterday as well. And when you're talking about the broader end of the markets, that is where the real outperformance lied, for the second straight session as well. Nifty Metal Index on the back of China reopening, as well as some uptick seen across the entire metal pack. You actually saw metal pack doing very well. FMCG was the laggard. Interesting to see whether that particular trend holds today as well. Asian markets opening on the back foot. SGX Nifty is indicating a gap down for our own markets.
Yes, a gap down start. In fact, 84 point lower on the SGX Nifty now. Vivek, thank you so much for all those cues. Over to Surbhi now, who will list out all the stocks we'll be focusing on in today's trading session. Hey Surbhi, good morning.
Hi, good morning. Thanks for that. So today I'm going to be watching out for Welspun Enterprises, where they're going to hold a board meeting on 30th of December to consider buyback and an interim dividend. Next is RVNL, where the company is appointed as a project implementation agency for the UTF Harbour project in Maldives. The project cost is approximately 1545 crores. Next is Hariom Pipes, where the company has entered into an asset transfer agreement with RP Metal Sections to purchase its operating assets for 55 crores. India Pesticides, where the company's wholly owned subsidiaries, Shalvi Specialties Limited, has received environmental clearance for setting up a manufacturing plant in Uttar Pradesh. And lastly, Suryodaya Small Finance Bank, where RBI has approved the reappointment of Mr. Bhaskar Babu Ramachandran as the MD and CEO of the bank for the next 3 years, with effect from Jan of 2023.
Okay, so thin on news today as well. So that's what happens toward the year end. But of course, these stocks will be in focus. Finally, let me go across to Manglam, joining in with all the cues from the F&O space. Hey, Manglam.
Good morning. So now, as you guys pointed out, the SGX Nifty is indicating a sharp downtick at the open, almost an 80-point cut. As we speak, it's down to 84, 85 odd points. But the important part is that, is this dip going to be bought or not? Because yesterday we had a good trading session, and the Nifty ended around that 18,135 odd mark. The FI is sold in cash market, DII is bought as well. But again, gross volumes were extremely low. In index futures, on the way up, we got a lot of shorts to cover their positions, so almost 6,100 contracts unwound, whereas a 300-point bounce in the last two trading sessions led the longs to also book some of their profits as well. So as a result of which, the long exposure of the FII is absolutely unchanged at 47 longs and 53% short exposure. The key data point to watch yesterday was the net selling that we saw from the FIIs in index options, and most of that was attributed towards put selling. So the FI sold almost 2,300 puts for about 9,700 calls, 23,000 puts for 9,700 calls. Why is this important? Because in the last two trading sessions itself, the FIs have sold almost 1.5 lakh puts, and that's telling you that we'll see firm support at the lower level, and the mid-cap index's outperformance also suggests that. The only thing to worry now is that the put-call ratio has now moved to 1.1 from 0.72, and levels upwards of 1.2 is usually when it indicates an overbought zone, and we do run the risk of running into some resistances. And the SGX Nifty is gap down, takes away that fear. So the dip needs to be bought. 18,000 call, saw a lot of covering in yesterday's trading session, and we saw a lot of writing in 18,000 put as well as the 18,100 put. So that's telling you 17,950 to 18,000, the levels where the market is likely to open, as indicated by the SGX Nifty, may find some support. Where are the resistances? At the 50-day moving average for the Nifty, just above 18,200, and for the Nifty Bank, just under 43,200, which is the 20-day moving average as well. And also watch out for a lot of stocks, because the mid-cap index has been outperforming, but in that we've seen Indiabulls Housing Finance and Balrampur Chini enter the F&O ban in yesterday's trading session, giving company to PNB, which is in ban already.
All right, okay, thank you, Manglam, for that. So that's the power prep for the day. A lot of cues that we need to watch out for. For now, we'll slip into a break. Up next, COVID cases spike in China as it lifts its zero COVID policy. We'll get you all the details on the other side of this very short break. Stay tuned. Welcome back. You're still tuned into Power Breakfast here on CNBC-TV18. Well, the RBI's annual report on banking trends points to improving health of the banking sector. Let's look at some of the highlights. The report says bank balance sheets have seen double-digit growth in FY22 after a gap of 7 years. In fact, in the first half of this financial year, banks reported the best growth in balance sheets in 10 years. Banks' capital adequacy ratio also rose at the end of FY22 compared with the year-ago period. Banks reported an overall improvement improvement in asset quality led by lower slippages, with gross NPAs declining sequentially to 5.8% by the end of March 2022 from the FY18 peak. Even non-banking entities reported better asset quality than previous years on the back of adequate provisioning and a strong capital position through FY22. All right, that's the update as far as the RBI's report is concerned. Shifting focus to the COVID situation in China, then, the country has announced more steps to relax its COVID curbs. In a latest, China's National Health Commission has announced it will drop COVID quarantine requirements for international passengers, which includes testing and centralized isolation. Travelers who produce negative test results 48 hours before departure can enter the country without applying for the Green Health Code. The relaxations will come into effect from the 8th of January. However, the NSE spokesperson has said they will continue to step up vaccination for the elderly and children and will focus on meeting the medical needs of the general public as well. Okay.
Our focus is to robustly prepare health resources with a focus on meeting the medicine needs of the general public, striving out to protect the key groups, including the elderly and children. In particular, we will step up the vaccination of the oldest citizens, and we will earnestly enhance the pandemic response in rural areas. Categorizing and managing COVID-19 as type 2 infectious disease will still need the strong support from the general public.
Okay, so China reported 20,000 new cases on an average last week as per World Health Organization. However, it has not released data since the 23rd of December. Wall Street Journal's China Bureau Chief Jonathan Cheng gets us the COVID picture from Beijing and the vulnerabilities of the elderly population.
Households that have elderly people in them, which of course is most households, there may be a little bit of a complication there in that elderly people in China are the most vulnerable. Many of them have not been vaccinated to the same degree that others have been. And of course, in the depths of winter with people who are 80 years and older, you would expect them to be the most vulnerable in any country, in any situation. And so I went and visited 3 hospitals in Beijing. Went to the ICUs, and there the scene was quite grim. I mean, you really saw elderly people lying in cots in the hallway of hospitals. People are not getting treatment for many hours. They have oxygen tanks, IV drips, and all this other stuff. So, you know, on the one hand, people are going to work, people are going to restaurants, people are going to cafes and bars again. But on the other hand, if you go to the hospitals, you can see that that is also part of the equation here.
In fact, China opening up has also been driving crude prices higher. Let's get in Manisha Gupta to get us all the updates from the commodity space and what's happening with crude prices as well. Manisha?
Thank you so much for that, Sonal. Well, we've seen the crude oil prices pair some gains early in the morning today, and there are reports of moderate weather post-Arctic blasts. Also, the U.S. refineries seem to be resuming operations, so that's taken some premium off the prices. But with Russia saying that they will curb exports to countries imposing price caps from the month of Feb 2023 is what is keeping some support on prices as well. Russia may curb output by 5 to 7% in the first quarter of 2023, supportive. And as we were just mentioning, that China will end quarantine requirements for inbound travelers from 8th of Jan is another thing that clearly has been supportive, not just for crude, but metals as well, and is the reason you have the copper prices now trading at a 6-month high.
Right, Manisha, thank you so much for joining us. So that's all the action from the commodity space. Let's also hear out what Andrew Lipa of Lipa Oil Associates had to say on the trajectory of crude prices going ahead.
Well, I don't think it's that much of an impact. I think it's closer to 500,000 barrels a day up to 1 million barrels a day. And irrespective of the total exact amount, I think that's worth about $5 to $7 a barrel increase in oil prices, especially as airline traffic comes back. Say the halt in the Strategic Petroleum Reserve sales, as well as a slower growth rate of oil supplies here in the United States. We have a mix of a number of factors that are going to increase oil prices even more than just the China reopening.
Okay, with that, let's move on. North India is in the midst of a cold wave. Delhi witnessed one of its coldest December in years on Monday. In a conversation with CNBC-TV18, the Met Department has said that the situation might improve in the next 2 days, but predicted fresh spell of cold wave during New Year's.
After a long period, you know that November, December, we were not having any WD. Now the WD is coming. On 28th night, it will affect the hill area. So we have predicted the light to moderate snowfall. and rain also over Jammu Kashmir, Himachal Pradesh. There may be clouding over Punjab, Haryana. After that WD passes, New Year we may get fresh spell of cold wave and fog.
Okay, that is about North India, but that's not contained to India itself. At least 28 people have died in western New York, mostly in Buffalo region, as a blizzard continues to paralyze the state. 1.7 million people are without power, and cancelled flights have left hundreds stranded during the holiday season. Rescue teams are struggling to operate in high-impact areas. NBC's Bri Jackson brings us the special report.
The death toll from the weekend blizzard continues to climb as authorities in Erie County, New York, discover more and more victims.
Died in a car, died outside from exposure, died in a snow shovel or cardiac event regarding the snow blowing.
Additional snowfall is expected later today. The National Guard is already assisting New Yorkers, while the White House says the federal government is ready to come to the state's aid too, declaring a state of emergency. And tweeting this photo of President Biden reached New York Governor Kathy Hochul Monday.
We'll be getting through this together very soon. I feel confident of that. But the most important thing is, please stay at home for the next day.
The winter weather is causing travel chaos on the ground.
We are asking people to stay off the roads.
And at airports nationwide, delaying more than 8,000 flights after Christmas and nearly another 4,000 canceled.
We have just been stuck for, what, a good 18 hours now?
According to FlightAware, airlines have canceled more than 17,000 U.S. flights since last Wednesday.
All right, that's the update from New York. But with that, we'll slip into a break. More news and updates will follow on the other side of this very short break. Welcome back. Well, 2022 has been a volatile year for the Indian market, with the Nifty higher by about 3% on a year-to-date basis till now. Some mutual funds, however, have managed to outperform and generate returns way higher than the benchmark. Pavitra is joining us and getting us a roundup of the standout performers from the mutual fund space in the year gone by.
As we wind down in this year, we thought it would be really interesting to look at how mutual funds have performed versus the benchmark. So let's now talk about the performance of large, mid and flexi cap funds today. This is all data from Morningstar, and I'm going to start with the large cap category. On your screen now is the one-year performance of the top 10 largest large cap funds. The benchmark return for this period is around 11%. And now let's compare how all of these funds have fared versus the benchmark. The best, like you can see on your screen, is the Nippon Fund. It has a return of nearly 17%. HDFC is a close second. And then you have the ICICI Pru Fund, which has clocked in a return of around 12.5%. Apart from these, none of them have managed to beat the index. So let's not stop at just a one-year return. Let's actually zoom out and take a look at 3-year and 5-year returns as well. And unfortunately, things don't look much better when you do that. A scorecard for the large cap funds will show you that for a one-year period, only 4 of the 28 managed to beat the index. Remember, 3 of these are already the funds that we spoke about from the top 10 largest fund list. This is what I showed you in the previous slide. In terms of 3-year returns, only 2 of the top 10 and 4 of the total 26 managed to beat the benchmark. And then if you want to move out even further, you will see that you had only 1 of the top 10 and also 1 of all 25 that could beat the benchmark over a 5-year period. So this is a complete recap on how the large cap funds did. But let's now move on and talk about the mid cap funds as well. This is the top 10 largest mid cap funds and the one-year return. The benchmark for this period came in at 8.74%, and only 4 of the top 10 funds by size managed to beat that. HDFC did the best, like you can see. It clocked in a return of 16%. This was followed by Nippon at 11%. And then you had Sundaram with a little over 9%. Let's also bring the scorecard up for you. And there you'll see that 4 of the top 10 and 8 of the total 25 could beat the benchmark. This is for a one-year period. If I look at the 3-year annualized returns, you'll see 3 of the top 10 and 5 of all 23 which could come in above the benchmark return rate. And for a 5-year time frame, we saw 4 of the top 10 and 8 of the total 21 managing to beat that benchmark figure. Lastly, we have the flexi cap category, and all of those funds will be on your screen as well. The top 10 largest are once again on your screen. The benchmark return is 10.2%. So let's see how it stacks up. The best performing fund in this category has been the HDFC Flexi Cap Fund. This one actually saw a really solid return, 24% for 1 year. But you know, this is quite an outlier, because if you take a look at all of the rest after that, they don't look nearly as good, right? So the scorecard will show you that things aren't much better even when you expand the time frame and take a look at that. So for a 1-year period, only 3 could beat it from the top 10 list, and from the total 28, only 5 managed to return, which was higher than the benchmark. Looking at the 3-year annualized returns, 3 of the top 10 and 6 of all 24 managed to beat the benchmark. And lastly, for a 5-year period, we had 4 of the top 10 and 7 of the total 21 which clocked in a return which was higher than the benchmark. So that is a recap of how large cap, mid cap as well as flexi cap funds have done. And while we have been talking about, equity flows being good, SIPs picking up month after month, it is important to highlight that fund managers have found it quite hard to beat the benchmark, at least in these 3 largest categories that I highlighted by size.
Okay, interesting data from the world of mutual funds, Pavitra. Thank you so much for that. By the way, as we wrap on this show, let me quickly take a look at what the Asian markets are doing. Hang Seng continues its up move. In fact, it has gained further. So that index is up around 2.3%. Taiwanese index continues its down move here. So that one is not doing so well. But SGX Nifty, that'll come up for you on the screen. The last time we checked, it was down around 85 odd points. And now it has actually extended those losses. So an almost 100-point downtick is what the SGX Nifty is indicating. Let's see whether it'll be another volatile session or not. For that, we'll take your leave on this edition of Power Breakfast, and Bazaar Morning Call will take all the action ahead.